Hello everyone and welcome to today's video. In this video, we will discuss the different avenues that we have available to us as investors for investing. Okay, so let's get started. So the way I see it, we have seven different avenues in which we can put our money. We can invest our money. So this is according to me. So if I'm missing out on some points, so don't be like, "Arey Aniket, you don't know anything about investing." It's okay. Please leave your comments in the comment section, and I will definitely read it out and I will research on it and I will post a new video for those points. But according to me, we have seven different avenues for investing our money as investors. So the first point, the way I see it, is investing in the equity market. So that is one. Another way of investing is investing in the debt market. Then we can also invest our money in fixed deposits or guaranteed return kind of instruments. Then we can also invest in real estate or land. And we can also invest our money in cryptocurrencies, which is a new way of investing, but you can also invest our money in cryptocurrencies. Now, some of you may agree with me that cryptocurrencies is a good investment, bad investment, but it is nevertheless a way of investing our money. Then we can also invest our money in collectibles. So what are collectibles? We'll just get into it in just a minute, but we can also invest our money in collectibles. Then we can also invest our money in commodities. Okay, so now let's discuss these seven things in a little bit more detail. So the first thing is investing in the equity market. In the equity market also, you can invest in two ways. One is you can invest in private equity and you can invest in public equity. Now, what is public equity? Public equity is nothing but investing in the stock market. That is basically those companies are publicly traded and you can go and give your money to buy a little bit of shares in your name on those companies, for those companies. Then comes investing in the private equity sector. So private equity is what? You can invest your money, give it to private companies, and those companies will give you equity in return. So those companies are not listed on the stock market. They are not public companies. They are private companies. Now that company might have partnerships or might be run by a single owner or multiple owners. But you can still go and buy equity in those companies and those companies will give you some stake in their company in return. Now what is an example of something like this? What you see on Shark Tank is basically an example of investing in the private equity market. Okay, so the next way of investing your money is you can invest your money in the debt market. Now, what is the debt market? The debt market basically is that you want to give your money for investing with a guaranteed return. So most debt instruments for investing will give you guaranteed returns unless something really terrible happens with the project or with the instrument that you're trying to invest your money in. So this is almost like a guaranteed return. Now, how does it work? Now, let's say a company wants to build something big or wants to invest a lot of money together in building a new factory, or the government wants to invest a lot of money in building bridges or wants to build a dam or wants to make a lot of roads in India. So what will the government do? The government will basically come to you with a piece of paper, and on this piece of paper, it will be written that we are going to build roads, so and so roads, and we are going to spend so much money on bridges. So it will say that, and it will say that in return for the money that you are giving to the government is going to give you some 6% return year on year. So, and it will also say by what time it will give you. So it might say that by 1 year or by 3 years, it will give you that return. So let's say the government is saying it's a 3-year bond. So the 3-year will probably give you some 6.75. It will give you something more in return for you giving the government a little longer to pay your whole money back. So it will give you your money back plus the 6.75% return. So this is your money, right? So this is basically a bond. A bond is basically a contract. It's a bond between you and the company or the institution that is borrowing money from you. So they are going to give you some kind of return for you giving them time to fulfill their project. So that is basically a bond. Okay, so now let's go to the third avenue of investing. So what is the third avenue of investing? You can basically invest your money in something like fixed deposits. So what is a fixed deposit? I think everybody in India almost knows what a fixed deposit is. Our parents and grandparents have been telling us what fixed deposits are since we are small. So we probably know what a fixed deposit is. So you basically go and open a fixed deposit in a bank. The bank will basically give you a guaranteed return in that fixed deposit. And usually that amount is not going to be more than the inflation of the nation. At times you will still find that your fixed deposit returns are still greater than inflation, but mostly that will not be the case. So fixed deposits is not a great way of investing your money. Most of the time you're losing money against inflation when you're putting your money in fixed deposits. So that's not something that I advise to do naturally, because I'm trying to run an investing channel, but that is still something that you can do to grow your money. Okay, so the next point is basically investing your money in the cryptocurrency market. So what is the cryptocurrency market? It is very complicated to explain in short, but it is a decentralized way of running finance. So that is in a gist what cryptocurrency is. I can make a separate video on cryptocurrency if required, but for now, the cryptocurrency market is basically decentralized finance. They are trying to decentralize the banking system. So that is what the cryptocurrency market is. And you can invest your money in cryptocurrencies as well. People have seen good returns in it when it's done in the right way, and they've tried to time it a little bit. So they have tried to buy the dips and sell the highs. That is something that has worked for people in the past. I would not recommend doing that form of investing if you have no experience in investing at all. But if you have been investing for years and years and years now, you might want to take a swing at the cryptocurrency market as well. Also, none of this is investment advice. Please make sure you understand this, that this is not investment advice. Please research and understand all the tools that you are going to use for your investing so that you make an informed decision. I'm only trying to tell you methods that are available to everybody for investing. Okay, so what is the next way that in which we can invest our money? We can invest in land or real estate, right? I mean, real estate or land, that is the same thing. Basically, land has given great returns in certain regions of India from time to time, from period to period. So it does depend where you are located in India, what city, town, village you are in, for you to make this informed decision whether you can invest in real estate or not. For me, investing in real estate is essentially very simple. I will not go and buy an apartment, or I will not go and buy an office space and put it on rent. I will not try to do that. Instead, I will always try to buy land which holds a real value. It is an asset that you build because the land is yours. If, let's say, you own something in an apartment complex, if you own an apartment in an apartment complex, what will happen? Someday or the other, the apartment is going to run down with time. And then the value of your apartment is next to nothing. It is only equivalent to the space that you have purchased. So it's not a great investment. But if you purchase land, that land, the piece of land is yours. So someday, even if there is a building on it or not, or if there is a house that you've constructed on it, even if that runs down, the land still holds its value. So to me, real estate is very much more effective to buy when you are purchasing the land on which your property is built. And if you can create cash flow from that property, it would still be great, because cash flow generation is possible when you have land and you have some kind of building on top of it. So let's say you have land and you have a warehouse and you're giving the warehouse out for rent to some manufacturing company, or if you have a bungalow or a villa in Goa, and you're giving it out on an Airbnb, or giving it out to rent to PGs, paying guests, then that would help in creating cash flow for yourself. So if you can generate cash flow from any device, any asset, that would only increase your chances of profiting out of any investment. Okay, so what's the next avenue for investing? You can also invest in the commodities market. So what is the commodities market? What are commodities? Commodities are basically resources that are used on a day-to-day basis by most people. So let's Google what commodities is. A commodity is a basic good used in commerce that is interchangeable with other goods of the same type. Commodities are most often used as inputs in the production of other goods or services. A commodity thus usually refers to a raw material used to manufacture finished goods. A product, on the other hand, is the finished good sold to the customer. Basically, like your steel, your gold, silver, sugar. So, these are commodities, these are resources that are used by people, and people are not going to care who produced these items. They are still going to use it. So, these are all commodities. Okay, so the next avenue for investing is investing in collectibles. Now, what is investing in collectibles? Collectibles are items that are produced in very low volume. So, the supply of those collectibles, of items that is very, very limited and can potentially not be replicated. Now, let me give you a few examples of collectibles. Examples of collectibles would be like pieces of art. Now let's say you have a painting of a Picasso or a Da Vinci or from our artist M.F. Hussain, and these paintings cannot be replicated. The artists have died, and the pieces of art that they have created are never going to be replicated by anybody. It's not possible. So, because these items are very scarce, these items retain its value and probably grow in value because there will always be somebody else who is willing to pay more money for that item than you have paid for it. And it does depend on what kind of collectible you are owning. So let's say you spot an artist way ahead of the world, you might be able to get something for a lot less cheaper and sell it many, many times later in the future. So another example of collectibles are carpets. Yes, carpets can also become great collectible items. There are carpets that were manufactured, made by hand, crafted by hand thousands of years ago and are still retaining its value. Not only retaining its value, have grown thousand times because the colors have really blossomed after many years of aging because of the weather. So this is just another example of investing in collectibles. There are many ways of investing in collectibles, including watches, very rare watches that are made, maybe 10 pieces are made or 20 pieces are made around the world. And those watches sell for crores and keep increasing in value with time. So these are just a few examples of investing in collectibles. So I think we've covered all 7 ways of investing according to me. Again, if I'm missing out on something, please mention it in the comment section and I will definitely try to get back to that. Thank you for viewing this video. If you liked this video and thought that you got something to learn from it, please like this video, share it with your friends and subscribe to this channel for more updates. Thank you and I'll see you in the next one.